Hello, and welcome back to another episode of the Collective Clicks podcast. This is your host, Brandon Bateman, and today I'm joined by Chris. Chris and I talk all about the different aspects of creative finance, what investors typically understand and don't understand, and why it could be a good addition to just wholesaling or flipping with your leads. Chris, welcome back to the podcast. How you doing?
I am good. We ought to connect every year or so and just reconvene.
Yeah, we only talk on recorded calls that then get published onto a podcast.
Yeah.
It's good to see you again here.
Yeah, same here.
And I'm excited for a follow-up to a year ago. Chris, for anybody that doesn't know you, who are you? What do you do? What's your background?
Yeah, so I'll give it brief because we got the other show out there somewhere. This is my 34th year, actually. That's going to date me just a smidge. So I've been at a lot of niches in real estate, but when I hit the 2008 skids, the crash, that provoked me to kind of reevaluate everything. I literally credit went in the toilet, no cash. I wasn't bankable. So that forced me to go buy homes if I wanted to even be in business creatively, right? So creatively for us is buying things without banks, without lots of money, without borrowing from investors, even not just banks. And we do so on owner financing and subject to existing financing and lease purchase, 3 ways, still to this day. But that's what that provoked. It was an ugly time. When I say we, by the way, it's a family company. We still buy homes ourselves. And we're in the trenches actively doing things as markets change. It's important. And we also teach it all across North America now and partner with students as they do deals.
Yeah, very cool. So yeah, I'm excited to talk about that. Like I said, we've talked before about the creative strategies and what you're generally recommending and stuff. I guess what I really want to focus on here as a quick update, in your opinion, since last year, what has changed in the world of creative finance? Or is that what you call it, what you do, creative finance?
Yeah, look, when there was 3 of us in the business, I called it real estate on your terms. You see my book on the wall. It's what my book's about. And then now it's this hot topic of creative financing. It's been around forever. Yeah. It's not new, but it's hot now. There's a lot of people doing it. So what's changed? Top of mind, no priority order, interest rates, and a little chaos, political and economical. But that's cool because my wife, I've been married 39 years this summer, and she always says, if something changes or happens, she'll say, how does that affect the business? Always. I'm like, is that okay? So yes, when rates change, that's great because more and more people, buyers in that case, can't get financing. So they'll need creative. When the media is in chaos or the political scene's in chaos or there's uncertainty, is that good? Yeah, it's great because more people need a guide, and creative financing is really hitting. So I won't say explosion, but it's continuing to rise because of everything I just said. So those things have changed in a year if you think about it.
Yeah, fair enough. I think, in my opinion, you tell me if this is true or not. It seemed to me like it was already pretty popular, but when rates went up, that's when creative got really interesting. Because when your seller had a 3% mortgage and you could get a 3% mortgage, then it's not nearly as interesting as when they have a 3% mortgage, but money for you is 7%.
Yeah. You bring up an interesting point. Yes. What you also want to look at is when rates were 2 and 3% for everyone, does that mean we're out of business? No, it's just a totally different pond you're fishing in. So sellers might not have been hurting, especially when it first started because they were refinance craze. But were there other people with some old past rates that were higher that were hurting and want to dump property and couldn't refinance? Yeah. So we had a whole bunch of deals. It's just you're fishing in a different pond at that point, meaning your lead source. It just changes. Yeah. I had a gentleman just today, Brandon, he was on a RIA, a Real Estate Investment Association, last night when my son-in-law spoke. This is like current, just happened. So he's interested. So he calls the company and he says, I'm interested, but I want to know why a seller would even do this. I live in New Hampshire and then I don't know why any seller would do this in the whole state. This is how broad he was. So I was chomping at the bit to call him myself. And I said, look, I couldn't wait to call you because I'm in your backyard and there's a guy in your marketplace in our community crushing it. And you just surpassed $1 million. Why? Because we fish off market. It doesn't matter what's going on in the market, what he thought about sellers. It's all off market stuff. Most of it is off market stuff. So just a little context.
Yeah, that makes sense. And I think the kind of things I've heard from our clients have changed, right? Like when I first heard about creative finance, this is back in probably 2019 or so. I remember the context I first heard it from was the idea that it was a flipper that I was working with. And the idea of instead of them getting hard money, they would just carry the seller's mortgage for 6 months while they're doing the flip. And then they would save a significant amount of money in the process. And that would be money they could pay the seller more or money they could make as extra spread on the deal or whatever the case was.
Yeah.
And that was
still creative. Yeah.
Yeah. Yeah, absolutely. So that was like the first context. And then now I feel like I'm hearing about it a lot more. So let's keep this as a rental property or rapid or whatever it is that people are doing. I've also heard a lot, and this is just me asking you curiously. There's a lot of people talking about those people, let's put in quotes, those people who are doing creative finance wrong. And based on that, they're going to be underwater at some point because they're paying too much property, they're counting on appreciation or whatever the case is. For me, somebody who's not like actively doing this, help me understand what, who are like those people in that scenario and what are they doing right? What are they doing wrong in your opinion?
I haven't heard that they're doing it wrong. So this is interesting. I'll keep an ear to the ground, see if it like picks up momentum. But how could they? If I said, how could you go wrong in creative? Creative is so broad, right? So
Yeah.
I would say a few things. One, if you ever, especially if you're new, take on a property, whether you bought it owner financing or lease purchase or subject to, it doesn't matter how you buy it. If you take it on without having your buyer in place, in our case, or if you're buying hold, rent or renter in place, there's a risk there. You're gonna take on some negative cash flow, right? We just don't do that. It's built into our contracts. We buy only contingent upon our buyer being in place. Now, when you're more sophisticated or you have cash flow coming, could you make exceptions? That yeah, we do all the time now, but we're established and there's cash flow coming in. Second thing is not checking simple things like when there's a variable rate on a mortgage. I've seen people in our community that didn't come ask us and got themselves to the point where the cash flow went break even or negative. Not a catastrophe, but in the grand scheme of things, you could have done better with that. You could have negotiated that differently. So it's just not, I think the biggest thing, because I could probably come up with a bunch of yeah buts of this, but I also think if you had someone watching you, it doesn't have to be a mentor, but someone who's done some deals at least, for goodness sakes, and preferably someone that's been through some cycles, because things that you see a lot, because this can be done in any asset class. You remember, this isn't just a house. So I may have said it on your show last time, I bought my building this way, multis this way, single, it doesn't matter. So the mistakes can be a myriad of ways. Just have someone looking over your shoulder who did deals. That's a short answer.
Okay, fair enough. What about this idea that banks can call the debt? I know like most mortgages are structured that way so they can.
Almost all.
It seems that generally they don't. How often have you actually come across that and how big of a problem do you think that can be?
I'll give you a current stat of this too. This is great. So I've never had it happen, right? In my 34 years. I'm not saying that the listener won't ever have it happen, right? If you don't pay the bill on time and you bought a house sub 2, just so the listener knows what we're talking about, and the mortgage is in their name and you don't pay it, number one, morally and ethically, you're out of line. But the number two, the bank's going to call the loan because you're late. Now, this is interesting for everybody to know. In Florida, as an attorney, we use a bunch of attorneys that do thousands and tens of thousands of sub 2 deals, right? And that's important for them to know. If you have the right attorney, you'll be fine, because there's a way they paper it. I'll call it the paperwork. And the Garden St. Germain Act in 82 allows you and I or anyone else to transfer their property for family planning reasons inside of a trust done properly, so that there's no due on sale clause triggered. That's not new. That's 1980. I think it's 82. It's in the 80s. This gentleman, his name is Charles in Florida. He's an attorney. His client, who's an investor, had a loan. A bank tried to call a loan. This is the first I've heard of it. And this happened last summer. He spoke at our event. He went to battle against the bank and he won. Why did he win? Because he papered the deal properly to follow the guidelines of Garden St. Germain and a trust that protects the seller. It's very important. So without getting into this big legal thing, 'cause I'm not an attorney, understand that when you deal with an attorney that knows how to paper it, I won't say it gets rid of all your headaches because he just had that happen, but he won. But I will say it'll mitigate even more what you're doing, opposed to an attorney who's never done what tells you, no, you can't do that. No, you can do it. It's not illegal. It's a contractual issue and you need to paper it properly.
Sure. Okay. That makes sense. All right. My curiosities, I've expressed all of my curiosities. I'm curious, like when you tell people what you do, and they're experienced investors, right? So for newbie investors can be a little bit different, but for an experienced investor that's speaking to you, what things are you usually able to help them understand that they generally don't?
Yeah.
Before looking into this.
So this really screams to a lot of other niches, really, who I'd be talking to with that answer. That would be wholesalers, flippers, some builders, but mainly wholesalers and flippers. What they're leaving on the table big time, and they'll get this as soon as they start digging into it, is forget the demand of creative now. It's high. But in addition to that, a wholesaler or a flipper, if they go out and get 60 leads, I'll use that because a recent one just told me this. They go out and get 60 leads in a month, they'll probably do a deal. Why? because in the wholesaling and flipper space, you gotta, in your business model, buy it at 60, 70 cents on the dollar, probably less repairs. I'm just generally speaking. So you're throwing away, let's say 59 leads. Out of those 59 leads, could some of those be bought on creative? Not all. Could some of them? Yeah. Probably, I'd say out of 60 leads, probably 4 or 5. That's a big difference from just grabbing that thing that you can steal at 60 or 70 cents on the dollar. So that's the biggest thing that anyone misses out on. And that's not a dig to them, because in my niche, I don't necessarily know the mobile home niche, for example. I don't know all the niches. So if you're zoned in and you're wholesaling and flipping, you know your craft well. Good. How about tack this on? It's the biggest aha they have when they learn it. Tack this on to what you're doing. Don't throw deals away. That's the biggest thing. I hope I answered that.
Yeah, you did. What, in your experience, when they start to do that, is the big hurdle? I can tell you like what I would be afraid of. This is big. This is scary. There's a lot of moving pieces. There's a lot of knowledge, scripting, that kind of thing. Right. So when you look at, and for a person to learn that, for a business owner, like I feel like a lot of people have a lot of confidence in themselves. They can figure that out. I think it gets hard when you have a team. And yeah, I have this team of acquisitions managers where like all they do, they're just giving these offers at 60, 70 cents on the dollar. And then now it's like, I'm trying to train these people, which aren't the typical acquisition manager isn't the real estate underwriter. They're like a salesperson who's trying to just negotiate. They can throw out a low number.
And probably rapid fire.
Yeah, exactly. Like they don't want to think about it. They don't want to go to a spreadsheet. They don't want to look at 7 different variables and how they all affect what that number kind of thing. So how have you seen companies that have actual acquisitions teams of, let's say, 3 or more people figure out how to add creative in there without it being a distraction, without it being executed, et cetera?
I'll tell you 2 ways, because literally yesterday, my son-in-law for our team got 2 leads, one in Atlanta, one to Florida, from this type of person who has a team, wholesalers. Here's how it sounds. So your acquisitionists don't get all messed up. It's very simple script. And then there's an alternative to this. The simple script is train them on how to say to a seller, if they're at the end of their rope and they can't get them to 60 or 70 cents or whatever the formula is, train them to say, look, that doesn't fit for me, but the market will probably allow you to get there if you talk to one of my partners who specialize in that, something along those lines. So then you just refer it and you let them know the name. So when we call, it's actually a great call for us because it's a warm call and we're coming in to try to help them out and the wholesaler couldn't. It's a one-liner. Because to your point, the second way of doing this is learn it yourself. But that's a whole other integration into your team. They'd have to be referring them to you, and then you'd need another set of skill sets or a team to do it. Either way is good. Most of them that have an established team refer out to us because they just flex into the profit center for them.
Okay, interesting.
Even though I'd love to train them all, but reality is, to your point, they want to just tack this on.
Yeah. I have heard of people also having a person on their team that's like their creative specialist. Like maybe I have 3 or 4 acquisitions managers and I've got this one person that just does creative. And it, just like what you talked about, the pitch is similar. Sorry, that doesn't work for this, but I've got someone else you could talk to. And then
specialize in this. Yeah.
All those people funnel to the same. The same like sales agent. It's
similar to a realtor, Brandon. Your question was good, but it's the same thing a realtor team could ask. I was a realtor once upon a time in the 90s. We were doing 100 homes a year. Like we were turning them out. But, and I think back in hindsight now, if there's anyone in this world, I knew my ratios. I would sell 72%, 72 to 80% of my listings. That means 20 deals a year where like, oh, sorry, I couldn't sell it. And I could have capitalized on that. It created, not only that, but created 3 paydays, not just 1 commission. Think about that. It's a big difference. Even a wholesale, they get 1 fee and they're going to hustle. How about create 3, like we talked about on the last show?
Okay. Yeah, very cool. Thank you for coming back, Chris. This was cool.
Yeah, you bet.
Learn some of your knowledge. For anybody who's interested in contacting you, getting to know you better, what's the best way for them to find you?
I'll throw the book out to your tribe again, in case anyone didn't get it. Just go to wickedsmartbooks.com/Bateman and the number 1. So your name, the number 1. And then, there's a free class. And so this is great because they can listen to the show and they go, okay, I want to know more or I don't. If they do, go to smartrealestatecoach.com/masters class. Free. Just go enjoy it. See if that's something you want to pursue.
Okay. Amazing. Thank you, Chris, for the time today. And for everybody else listening, I will see you next week.
Thanks, Brandon.